So let's say you're a younger person watching this video and you have a lot of time on your hands, so you want to become a tax-free millionaire using a Roth IRA. Well, one of the very best investments that you can make with this type of retirement account is investing in a low-fee S&P 500 ETF. This allows you to invest in the 500 largest publicly traded US companies, giving you a little slice of each one. Now, I just did a full video on S&P 500 investing. I'll put a card in the corner if you want to check that out later. According to NerdWallet, the S&P 500 index returns about 10% on average annually, assuming that you are reinvesting dividends. Let's assume you're 20 years old, meaning your contribution limit would be $7,000 per year, or about $583 per month. Using this compound interest calculator, we can determine how long it would reasonably take you to become a millionaire investing in the S&P 500. So we're going to assume you're starting off with an investment here of $0, and you're making that $583 in monthly contributions to max out your Roth IRA contribution. And then, as mentioned before, the average return from the stock market is 10% annually, and we're going to start off by looking at a 10-year time horizon. So after you follow this strategy for 10 years, we can see here that you would have about $111,000 in total value in your Roth IRA retirement account. In terms of your contributions versus your earnings, if we take a look at the blue versus the red line, you've contributed just under $70,000, meaning that you've made about $41,000 in investment gains from the stock market. But as we go forward here, you're going to see this red line accelerating at a faster and faster rate because of the exponential growth factor associated with compound interest. If we push ahead now to the 25-year mark, we're going to see a big change in the value of this portfolio. Now you're looking at $688,000, and you can see that red line accelerating at a faster and faster rate. In terms of your contributions, you've contributed about $175,000, and you've made a little over $500,000 from the stock market. But of course, you want to become a millionaire with this strategy, and it's crazy just how fast that happens from this 25-year mark. If you go ahead just 4 more years to the 29-year mark, that is how long it would take you to become a millionaire with this strategy, and you would have an account value of $1.04 million, give or take. In terms of your contributions versus your earnings, you would have contributed just about $200,000 and a little bit extra there, and you would have made over $800,000 in investment gains from the stock market. Now, because you're doing this in a Roth IRA, you do have to wait until 59.5 to begin drawing from that to take the earnings out. You can take your contributions out anytime. We'll talk more about that later, but let's say, for example, you want to keep going with this strategy and go from age 20 to 59.5 and see how much wealth that you can build in the Roth IRA. Well, that would mean that you would be investing for another 10 years, pushing you to the 39-year mark, and this is really going to blow your mind here, but at that point in time, you would have $2.8 million in your Roth IRA. And keep in mind, as long as you follow the limitation of not touching the earnings until the age of 59.5, all of those earnings are completely tax-free. In terms of your contributions, you've only contributed a little bit over $250,000, and you've made almost 10 times that in investment gains from the stock market. So it's absolutely insane how that growth just continues to ramp up because of the power of compound interest. And keep in mind, this is all based on the current contribution limit for the Roth IRA of $7,000 per year. If you wanted to be even more ambitious with this strategy, you could continue ramping up your monthly contributions as the IRS increases that contribution limit in the years going forward.